Welcome to our in-depth economic update for the Q1 2026. We'll be covering GDP for Q4 2025, consumer behavior, and the widening wealth gap. The latest data reveals crucial trends impacting the American economy. Let's start with the Q4 2025 GDP figures. The reported GDP for Q4 2025 came in at a weak 0.7%, significantly lower than the initially reported 1.4%. This reduced GDP figure was primarily driven by weaker consumer spending, lower business investment, and the impact of a government shutdown. Despite the lower GDP, consumers are still spending. However, their behavior is shifting dramatically. Consumers are prioritizing necessities and cutting back on discretionary purchases, with those in the lower income bracket actively hunting for value. A worrying sign. Credit repayment delinquency levels have climbed to heights not seen since January 2020. While most consumers are employed and payment data suggests resilient spending power, job hiring remains limited across most industries. The economic divide is accelerating. We are seeing a distinct K-shaped recovery, where the top is surging ahead. The wealthiest individuals are fueling demand for luxury goods, evident in the growth of high-end cars, luxury hotel rooms, and private jet travel. The number of multimillionaire households is growing. The Federal Reserve estimates around 430,000 U.S. households hold $30 million or more. This wealth expansion for the rich is driven by a rising stock market, lucrative private investments, and soaring valuations for small to mid-sized businesses. Next, let's look at how assets, particularly housing, are affecting net worth across different wealth levels. Homeowners at all wealth levels have benefited significantly from persistently high home prices, contributing to their overall net worth. However, first-time homebuyers face severe challenges, as 30-year fixed mortgage rates have surpassed 6.6%, compounded by median home prices near $400,000. The wealthy, unlike other groups, own substantial appreciating assets. The top 0.1% wealth group holds 72% of their wealth in stocks, mutual funds, and private businesses. Shifting gears, let's analyze the latest labor market figures and consumer confidence levels. Unemployment filings rose slightly to 210,000 for the week ending March 21st. The total number of unemployed workers decreased marginally to 1.82 million. Job openings dropped to 6.9 million in February. Furthermore, hiring fell to its lowest rate since April 2020, with only 4.8 million workers finding jobs in February. A troubling sign is the labor force participation rate declining to 61.9%, its lowest point since late 2021. Consumer economic sentiment hit a low of 53.3 in March. Consumers are increasingly worried about inflation, energy costs, and the economic impact of the Iran war,